I don't make these videos often because no one watches them. How you can tell if your rental real estate makes sense. I can hear the groans already. Say the property makes $120,000 in gross rents every year. Could be 12 units, 10 units, 1 unit. If it's a bigger property, add a zero, make it 1.2 million, whatever. This assumes that this number's vetted, the seller's not lying to you, you check the market, all that stuff. Cut it in half. This is the 50% rule. It's gonna go for insurance, property tax, maintenance. You're not taking care of this thing, you're looking for property management. You can say 50 is pretty aggressive, so you can use 40%, but if you go below 40, I'm gonna be skeptical, and so will the lender. With half gone, you're keeping $60,000, that's your net operating income. When lenders look at this to decide whether or not they want to lend you money, they're going to use the debt service coverage ratio. That means the net operating income needs to be 25% higher than the money that you're paying to debt. They want to make sure that you can cover the debt payments. That's why it's called the debt service coverage ratio. You're making a profit of $60,000. How much should your payments be per year? No more than $48,000 because your profit of $60,000 is 25% greater than this. The lender will either lend you less or require that you're building profits more. Open up any mortgage calculator, play with the numbers to see when you can get a payment that is less than $48,000 a year or $4,000 a month. With a 5% interest rate, 25-year, paid monthly on $675,000 in mortgage, your payment's $3,925, which is less than the $4,000 a month or $48,000 a year that the bank will be willing to lend you. Knowing that the bank will only give you $670,000, does the property make sense? Now you look at the price, not before, you look at the price after running the numbers to see whether or not this amount of debt from the bank makes sense for you. Let's assume you're putting 20% down, so this $675,000 represents 80% of the price. So the maximum price you're able to pay with the bank backing 80% of the purchase is $845,000, roughly. Remember the 816 rule, where if you pay more than 8 times gross rent multiple, you're not making any money? Well, let's say your annual rent was $120,000. What is 8 times that? $960,000. Max price to see any cash flow. The lender wants you to pay less. Is that a surprise? I don't think so. I know most of you guys didn't understand any of that, but that's fine. Get financially literate, start here. Keep up to date with the newsletter linked off the bio. Good luck. Take care.